Thanks for staying with us on SABC News. Asian stocks fell today, pausing the gains that they made this week as fresh Chinese data showed prolonged weakness in the property sector and dented some of the recent optimism about a recovery in the world's second largest economy. So the Hang Seng Index down 1.4%, the Shanghai Composite Index down 0.7%, and the Nikkei in Japan down 0.1%. Let's go over to the United States. Stocks closed slightly higher on Wednesday as fresh inflation data reinforced investor hopes that the Federal Reserve is done raising interest rates, while retail stocks were boosted by an upbeat forecast from retailer Target. So the S&P 500 gained 0.16%, the Nasdaq Composite Index gained 0.07%, and the Dow Jones Industrial Average rose 0.47%. All right, let's make some analysis. Let's get some analysis from Tato Mashego. He's a portfolio manager at Sanlam Private Wealth. Tato, very good afternoon. Thanks so much for your time on SABC News this afternoon. We're waiting for US manufacturing data. What is that going to tell us about the state of the economy and what else is moving markets there?
Good afternoon, Zinga. I think there's a bit of data coming out later this afternoon or early morning US time. As you mentioned, some of the industrial production numbers will come through. And what will be most interesting is just comparing manufacturing versus services. Obviously, we know that the US is a services-driven economy, but of course there's I suppose a higher variability from the manufacturing side of things, just given the supply chain situation. So it will just be interesting just comparing that data to what we've seen from the Eurozone and from China. Obviously, Eurozone industrial production has been contracting for some time now, whereas we've seen some stabilization in the Chinese data that was recently released, which is better than expected. So that would be one of the signals that the market is looking to. But I think another data release, which will be very important, will be initial jobless claims. And of course, that is from an inflation, and one of the data points that the Fed will look at quite closely just to get a sense of, are we okay with where rates are at the moment? So some interesting data points coming out later today.
Okay, Tato, if we stay in the United States, we saw President Xi Jinping from China visiting there, having discussions with US President Joe Biden. Take me through what that does for either the world's second or first largest economy in terms of market movements, in terms of perception, maybe trade as well.
Well, I'd say that in terms of market movements, or rather market implications, it's quite limited. However, I do think that the meeting was important from a geopolitical perspective. I think it's in everyone's interest that the two major powers of the world have a more cordial relationship. And this was part of that process. We've seen various cabinet level meetings over the past few months, but this is the first time that the presidents have met in some time. They have announced a few, they've made a few announcements which not directly related to markets, such as, other than perhaps commitment to increasing flights between the two countries, so we could see some benefit for inbound tourism, which is material for both sectors. But I think for both presidents, for President Biden, for example, I think this meeting was important from an electoral campaign perspective. There was an announcement that there'll be a crackdown on precursor chemicals being exported from China, obviously with the fentanyl crisis in the US. So that was a win for President Biden. For President Xi, on the other hand, he had a state dinner with leading US businesses, and from what we've read, it seems that it went well and the reception was good. So that could lead to positive business sentiment towards China. So I think both of them got what they wanted out of it. But from a market perspective, not necessarily very material.
All right, if we go over to Asia, then we saw a slowing of that momentum and the gains that we've been seeing in the earlier part of the week in their markets. Why is that?
Well, I think the Asian markets were a bit muted as far as today is concerned. I think One, of course, the APEC summit, which is going on in San Francisco, is quite topical. And of course, the Xi-Biden meeting, which didn't really give much for the market to have a look at. I mean, yesterday we did see some data out of China, which did drive the markets to an extent. Continued weakness on the property side. So I think, property sales per square meter year on year down 20%. Whereas there was some positive data from a retail sales perspective, which was better than expected. So some mixed signals, and trying to draw, I suppose, direction from that is a bit tricky as far as, I suppose, the Asia region as a whole is concerned.
All right, let's come home, Tato. What's happening on the JSE this afternoon, and then the South African state and its efforts when it comes to the South African economy are being castigated or spoken quite badly about by that Harvard Growth Lab report. Do things like that live in the markets, or is there already an awareness of the challenges that our South African economy is facing and it's already priced into how investors look at us as a country?
I would say it's definitely priced in. One only needs to look at the discount that our equity market trades at relative to emerging market peers. And similarly, if one looks at the bond yield and the relative spreads versus emerging market peers, one can clearly see that we are trading at a discount. There's very limited foreign activity, whether it's equity in the equity market or in the bond market, and we've seen very reduced flows. So it's definitely priced in. And I think people are aware of the issues that South Africa is facing. As far as the growth report is concerned, it's a very strong team that they do have at Harvard, led by Professor Hausman. I'd recommend his work for anyone interested in development economics. He's been researching South Africa for close to 20 years, and he's been involved at a policy level for quite some time. So I would say that his views do carry some weight, I think, in senior circles. The two things that he did highlight, and his team in their reports, which is not news to South Africans, one being deterioration in state capacity, whereas from a policy level, a lot more has been demanded of the states over the past 10 to 20 years in terms of service delivery. Yet the capacity of the state, particularly at local government level, is not particularly there to deliver on those demands. And secondly, the spatial patterns of the country continue, and that has not really been improved. And when you have a lot of your workers away from primary labor markets, that obviously does lead to a disconnect. So a lot of these things are quite well known, unfortunately, and what is needed is really major stakeholders to start implementing solutions to solve these problems.
All right, let's take a quick look at commodity prices. We saw the oil price declining a little bit earlier on today. What led to that, and is that a significant decline?
So yeah, oil is close to $80 per barrel, I think now around 80.5 or so. So we have seen quite a market decline recently. One remembers perhaps just over a month ago when oil was north of $90 per barrel. I would say over the past day, the most significant event would have been the release of the US stocks in terms of crude oil supplies, and those increased by over 3 million barrels versus market expectations of just 1 million barrels. And I think we are starting to see the US replenishing its strategic oil reserves, something that they have intimated for a while that they would want to do. In particular, from the government perspective, oil has been a major driver, of course, of inflation over the past few months, and so increasing supply in an environment of softening demand would drive down the oil price and then subsequently moderate inflation. So it's almost a dual purpose of them doing this. So that's probably one of the major reasons I would say that we saw oil continuing to soften today.
Tato Mashego, Portfolio Manager at Sanlam Private Wealth, thanks so much for your time and analysis on SABC News this afternoon. I really appreciate it. Let's take a look at the JSE. Just before lunch, we saw it lower. The all-share index then down 0.8% at 74,201. If we look at currencies over the last hour or so, the rand trading at 18 rand and 24 cents to the dollar, 22 rand and 57 cents to the pound sterling, and 19 rand and 77 cents to the euro. And if we go to the commodities markets, as we we're just speaking about with Tato, barrel of Brent crude oil around $80.14, platinum at $897 an ounce, gold at $1,965 an ounce. And that's where we leave it for now.